here, there's, looking at XLM, now that this is formed, you can see we have a bull flag, right? So there's your triangle creating a flag formation. Not a flag, a pennant. So yeah, we have a bull pennant here that we started breaking out of. We're riding the EMAs. We have a ton of, look at all that support for my Ichima, right? Look at all my Ichima supports. The 99 is crushing it. Tons of support. It could not break down south of that 99 no matter how hard it tried. See? Beautiful, beautiful model. I love Ichima model. It's amazing. And now we have a breakout here, which is clearing well above the EMAs, putting some distance there. We're going to start to see the EMAs diverge. They're going to have diverging properties, so you're going to see them pulling away from each other. The 55 is going to pull up a lot sharper than the 99, which is going to be good. It gives us sort of a trampoline to bounce off of if and when we do correct. We're also seeing the cloud move up solidly, and that's always a good sign too. That indicates the moving averages that Ichimoku uses to calculate are similarly trending upward with positive outlook. So in this case, we're breaking out of essentially everything we had to break out of. We had this trend line, we had an earlier wedge, now we have this bull pennant. So from here, I don't see necessarily great supports just based off prior trading offhand. Let's see. So that'll be one. Bottom, and then right here where it was riding across, that's tough because that's more of a range. We have a whole range here, so it's hard to say, but just a rough idea right there would be a good support level. It's kind of all over the place, so it's very hard to identify support based off prior trading range. Now we can take a quick fib retracement. That'll give us some helpful data. Alright, so that's going to be the move up's retracement, and this is going to be a retracement from the drop back down. So we can see if there's any confluence between the two. Not really. They're pretty well staggered. The closest would be the 382 and the 0.5. There's some confluence there. You remember those confluence zones when you're looking for support and resistance, or two different indicators are giving you the same level, or in this case, two different fib retracements from different places. It's very important to be able to identify that because a confluence zone is going to be the strongest potential support and resistance level, and in this case, look what happened. I happened to mark right here as a strong support, right? We had the EMA right there as a strong support. Then after the fact, after we had both of those giving us a strong support level, we did the two fib retracements, and now look, 382 and 0.5 match up, and there's a confluence right there at that exact level. That's why I tell you it's so critical and crucial to be able to understand support and resistance and identify them using the different types. EMAs, prior trading ranges, trading history, look left, and Fibonacci. So in this case, we did all three piece by piece. I identified each one individually. By doing the two fib retracements, I can see a confluence zone of the two Fibonacci levels right here. That in and of itself would have been an indicator that that's a really strong support. Add into the fact that before I even had that data, I identified it just by the naked eye, just from seeing where the trading was. And then on top of that, all the support we had from the 99 EMA. Plus, that's exactly where it came to a point in that triangle part of the pennant. So that's an amazing spot. It doesn't help us much here because I'm going to move my stop loss up to above that anyway. It should be right at the entry on this chart. Putting it at the entry here would have it below the top of the cloud and below both EMAs. Right now it's not below the 99, but if we started falling by the time we got down to that level, chances are, unless it was a huge, massive, instant sell-off, the EMAs would progress upward a little bit and intersect with this support here. I'm going to use this support later on, and I'm going to have to go back and look at like a 4-hour chart to find earlier supports, so I can identify ideal places to set our stop losses as I move up this thing. Like, for instance, I can see some right where the price is right now is actually at a decent support. And then up here is going to be a really strong support right there, the end of wave 1, which also matches up with the top of a lot of these moves. That's going to be a clutch one. So right now, since we're sitting right at a support, what you would do is when you get over this next support, when we break 83333, when we break that 8330 pretty much, break over 8330 like this, target for SL adjustment. So once we hit this target and close at that target a little bit above that resistance right here, when that occurs, that's when we move our stop loss up. And once we do hit that adjustment target, our stop loss can get moved up to underneath the next support we have. Right there would be a modest 2.75%. Lock in 2.75%. Once target hit. Target is reached. So that's going to be the plan. But once we do reach that target, that's actually going to be at 7.3, so let's call it 7%. So it's going to be up 7%, but I'm only locking in 2.75. I want to see if I can find a better support. So if I can do another fib retracement and find a good range to do it from, I might see this 786 might match up with another fib level right at the top of this candle right here. So that could be a really strong range, in which case we could place the stop loss just below that instead. Pretty much see the top of this wick. If that ends up, if I can go back to the prior trading areas and I can see, look, we already have the top of this candle here and we got rejected at that wick right there. So this is a good potential support resistance level, right? We might end up needing that in the future. So let me mark that off, and I'm going to go do some research a little bit later. And if I end up being right, then if I can look at the earlier chart from, several days prior, or several weeks prior, if this ends up being a helpful level, I'm going to use that. That way, once we do move our stop loss up, once we hit that target up here, I'll be able to move it up to here and lock in 4% and change. All right, that's that for XLM. I will do some more charts, more videos, more updates in a little bit, and go help with the kids.